Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Graeme Faulds, Director of Product at eVestment Private Markets, which provides data and analytics software for the private markets industry through their Market Lens solution, a market intelligence platform that tracks commitments and other activity from large public pension plan investors. The company tracks investment activity across private markets and other investment options. Graeme, thanks for being with us today.
Hi, Jill. Good to be here.
What has eVestment been seeing in terms of private equity fundraising through the first half of 2020?
Yes, in the first half of 2020, we saw total commitments of $34 billion being allocated to private markets. And that was made up of 400 commitments, averaging about $84 million each. If we compare that to the first half of 2019, then we saw $33.5 billion of total commitments, and that was made up of 338 individual commitments. So we've actually seen in 2020 a slight increase in the first half versus the previous year.
Well, that's surprising because even as the pandemic created a lot of uncertainty and shut down economies, there hasn't been a decrease in activity by these investors.
No, absolutely. I think investors probably took a bit of a pause when the pandemic hit and the markets became quite turbulent. But we've not seen a repeat of the denominator effect that we saw back in the sort of late financial crisis of the late 2000s.
The denominator effect, tell us more about that.
Yes, so the denominator effect is because in private markets, funds tend to be valued every quarter. And those valuations take quite a while to feed through to the system and to the investors. And so if I'm an investor looking at my portfolio, and the markets were to take a dramatic turn down, and it could mean that my allocations to private markets look to be overestimated compared with the rest of the assets. This happened, as I say, in the late 2000s, and we saw a lot of investors trying to rebalance their portfolios. And they were trying to generate some liquidity, but also to try and counteract the denominator effect. And they actually were selling off their primary fund positions at what might have been a bad time, because as we look back at that data now, we see that some of the best performance came through in those years immediately around the recession.
That's interesting. So would you say that institutional investors are reacting differently to this crisis versus the global financial crisis?
Yes, absolutely. I think a lot of lessons were learned last time round, in terms of that denominator effect is really just a temporary timing issue rather than a sort of more fundamental one. And so I think they don't want to be missing out on any sort of great opportunities that may appear. It's also worth pointing out that in private markets, you're making a commitment and that money will be invested over the next 3 to 4 years. So you've got to make sure that you're not making short-term decisions with what's going on now, because that money is actually going to be deployed over a few years.
That's a good point.
Sorry, I was just going to say, I think what's also worth pointing out is that we've also seen listed markets recover massively, and therefore the denominator effect's not really been able to take hold.
Got it. So where are they doing the buying?
Well, we've seen a lot of interest in private debt, and in particular, opportunistic funds and special situations funds. And I think that's reflective of the fact that as a lot of businesses are facing challenges in this pandemic, there's an opportunity potentially for private market funds to step in and provide liquidity and finance through these times. And certainly from what we're seeing in Market Lens, investors are quite keen to deploy money on that strategy.
So do you expect to see fundraising continue on this pace for the rest of 2020?
That's a tough question, because it's not all within the control of the investor. Certainly what we've seen is that they're keen to keep deploying assets into private markets. But what we need is for private equity fund managers and other asset classes to make sure that they're continuing to bring funds to market so that investors have something to invest in. And actually, a lot of private equity fund managers might be looking at the current sort of uncertainty and choosing to postpone their fundraising. And so it'll be difficult to know for sure whether this trend will continue through the rest of the year. And that's where something like Market Lens is a great way of tracking that.
And where can viewers get more information?
If viewers want more information, we have produced a monthly monitor that details the sort of key trends that are happening month to month. And that's available at privatemarkets.evestment.com.
All right, Graeme, thanks for joining us this afternoon.
Thank you.
Okay, thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.